Welcome to the podcast, Entrepreneur Perspectives, thinking through your business one podcast at a time, a CADSource production. In this episode, I chat with Randy Newton, CPA and partner at Lodestar Tax and Accounting, PLLC. This episode exists because of CADSource. CADSource is your content team. You know how many business leaders need help communicating their story? That's what we do. Content strategy, creation, and distribution for business leaders. This provides opportunities, relationships, and a platform for you and your business. Why do we do this? Because at CADSource, we exist to help you create and share amazing content. And yes, you should have a podcast. We'll help you. Learn more by visiting CADScontent.com. Randy is a licensed certified public accountant in North Carolina and South Carolina. Randy uses a proactive tax planning model that streamlines, simplifies, and works to reduce tax liability, and he is constantly looking for ways to save clients additional tax dollars while educating them about the ever-changing tax codes. And with that in mind, we are featuring Randy today on this podcast to discuss the federal coronavirus relief bill known as the CARES Act and what it means to small businesses. There's a lot of confusion around this bill, and Randy is here to help walk us all through it. If you want to connect with Randy after listening to this episode, he asks that you reach out directly to us at info@cadsource.com. He is offering programs for those that come through this platform. We now welcome Randy Newton. I thought we would start with who you are. So obviously a CPA, and there's a lot of CPAs out there. There's a lot of people with knowledge of accounting, but I want to get a quick background on who is Randy Newton and what's your background as a CPA?
Well, the background is about 25 years into the business, and I started back then just doing taxes, but then I decided that the real need is, because a lot of people do taxes, so the real need is how do you not be just another commodity and add some value to people rather than just doing a tax return. And so what I found is that what the key to that is, especially business owner clients, they just want to be educated and they want to be empowered with knowledge. And they don't want to be an expert on it, but they want to know why is the outcome the way it is, especially if they owe. And what did they do wrong or what did they not know that could have saved them some of these tax dollars? And so my job is to be more of a consultant and a coach rather than just a tax preparer. The tax preparation piece comes with it because you have to file your tax return. But my real quest is to help them understand the reason why the outcome is this and how to then leverage that knowledge for the next year so that next year the outcome is more in their favor. And it doesn't matter that they owe or get a refund. That's actually very irrelevant. What matters is the effective tax rate you're paying on every dollar of income. If you get a refund, that just means you paid too much in and you'll get it back. And if you owed, it's the opposite. But everybody measures it by that because that's the emotional piece of it. But that's not the real answer. The real answer is how much out of every dollar are you paying to the government? And so if we can help them understand the secrets to not giving more than you're required to pay, then that's the key. And the IRS and the tax code has been around for a little bit over 100 years, and it was written by attorneys for attorneys to understand.
Yes. Well, in full disclosure, we use Randy Newton and his CPA team for our taxes. And that's not just because it's convenient to give them a call and have them work on it. It's because we've been through it and understand what you're talking about from the consultative side and answering my crazy questions that I can come up with around tax time or really, any time of year. And I think this year, 2020, we're talking in this pandemic that we're dealing with and as small business owners, and it's just, there's a lot of stuff going on. And that's when I'm reading your emails. We're having some back and forth. I'm having some crazy questions. And I said, well, what about if we got a podcast going and we talked about it? We talked through it. And from this standpoint, I want to ask some questions. Some of the questions I know some of these answers to is because we've been working with it. I originally got introduced to you from my business partner, Shane Snively. I like to call Shane the CPA or before you need a CPA, but he's not a CPA. He's not a practicing CPA, but he does have a lot of information. And so it's good. It's important to have it. I guess the point in saying all that is having a team around you. And that's what I've done in building this business is I wanted to partner and be with people that perhaps have insights and knowledge and experience and services that I don't necessarily have. I don't have that expertise. I'm not going to pretend to be a CPA. I'm going to know enough to be dangerous. And that's where this conversation goes. But like I said, in full disclosure, we do work with Randy and his team. And with that, before we get a little bit further down the line, full disclosure, of who is behind you? Because it's not just Randy Newton. You have a team of people there.
Right. Yes. So we also have a C-suite built into our practice, and the C-suite is made up of bookkeepers, consultants. We have one guy that comes from the operational side of the fence for over 20 years. He was a COO for many, many years. He was a chief consultant for huge corporations overseas and here. And so he brings a fractional COO type background. I used to be a CFO, so I bring the fractional CFO side of the house. And then, like I said, we have the internal staff and the support teams, and that's just our core group. Then what we have is we have a very extensive back office that is like a round table approach. So they're not internal, but they're almost internal. So what I mean by that is I spent about 15 or 20 years weeding out the so-called professionals who are really just in it for a commission or something, and who in each industry really is in it for my client's best interest. And so over time, just, the truth comes to the surface, and you know who those people are. And so that is who's on my bench, my back office. And that's anywhere, any discipline you can think of, whether it's legal or insurance or investments or financial planning or trust and estates or real estate or anything. And so when you add the back office to my core team, we have a pretty amazing roundtable of professionals that we bring to the table for the client's best interest. And so most of our small business clients, the way they like to work with us is they like to work with us more of on a value pricing model rather than just the old-fashioned hourly rate. When you pick up the phone and call, you're going to run the meter.
Right.
And same things with attorneys have that stigmatism also. So we like to just say, hey, look, let's try to meet up 2 or 3 times a year to make sure we're proactively bringing in that holistic roundtable consultative efforts to your business. I mean, we're going to do probably your books every month anyway and your accounting. But in addition to that, let's get in there and actually do some deep diving work 2 or 3 times a year so that we're helping you plan for the rest of the year. And along the way, we'll bring those back office people in as we see you have a need. We will see where you're bleeding cash. Sometimes you're internally bleeding and don't know it. So our job is to play cash flow doctor and stop the bleeding, and then build a good infrastructure. Sometimes we even have to look back at the past and say, God, you don't even have that operating agreement yet.
Yeah.
Once you get sued, and things like that, patch these holes that we find, and then go forward and say, look, let's project your tax so we can put some measures in place, 401ks or whatever might make the most sense for you. Tax credits are a big thing. A lot of people don't even know they're eligible for tax credits, but except that tax time is too late.
Right.
Can't do anything about it.
Yep. Yeah. And we've lived that going back. We've lived through that of having conversations with you well before the conversation comes up, because there's still going to be difficult conversations down that path. Like you said, the emotional side of it, I think that's a good way to say it. And you're not afraid, and your team's not afraid. Like many good CPAs aren't afraid to say, here's the situation that we're dealing with. We have to do something about it. Like say, oh, the operating agreement's not there. We got to do something about it. So we've talked, obviously, small business owners, and the main reason we're having this conversation today is to what's happening with the SBA, with the availability of different loans, with the confusion of what is out there. It sounds easy. You turn on TV and it sounds very easy. They give you 3 bullet points and you get on there and you're like, oh, this is great. But then there's multiple different loans, and then one loan comes out and then the second loan comes out, and like, well, who's underwriting these loans and how is this loan being done, and who's involved in the process? It's enough to drive someone crazy. It's enough to make, I've seen people who have a background in accounting and understand this and have a legal background, and they can read and they're like, I don't know what to say. Then I'm starting to think of some small business owners. You think of like a daycare, they don't have, or a restaurant, they have enough cash on hand to stay alive for 16 days. 16 days, I heard that for a restaurant. And I'm like, well, how are they going to make it? Because they had to close down. How are they going to get access to these funds? I don't know if they can get it in time. Even if they do everything correct, even if the other side's correct, are they still going to get access to that cash? And we're having questions come back to us. And you're like, oh, I wonder if they're going to stay in business. And so here we are. And we have these different loans. And I think the one that stands out that people have heard probably the most now is the PPP, Paycheck Protection Program. But there's other ones. You have the EIDL, and then you're going to say a bunch of other letters for us. So give us, if you can, the quick and easy behind the different available options that exist for small business owners as it relates to this CARES Act.
Well, let's give the premise first, and then we'll give the various products that are out there. So the premise of why that act passed, the CARES Act, which passed a little over a week ago now. And by the way, it's amazing that it passed, because in today's political environment, the 2 houses of Congress can't ever pass anything, it seems like. And They actually passed this because they got so much pressure to pass it, and it was the right thing to do. And so now that we finally have a new tax bill on the table, I had to scramble to become an expert at it really fast because we didn't have much time. Thank goodness it came over a weekend so I could use the weekend to get in there and really study it. So the bottom line is to figure out a way to get people, employees, off of the unemployment rolls and back onto the employer's payroll. But knowing that the employer, if they're going to bring them back or rehire those that had been laid off with no income because they still can't open, especially restaurants, but yet they're being asked to pay the employee's salary. So this act is designed to fund the employers with the cash they need until they can start operating again so that they can pay these people's salaries and some other bills like rent and utilities, but most of it's payroll. And the government knows they're not going to have any income to balance out those outflows. So that's why the government is bending over backwards to give these people these funds. A lot of these funds are going to amount to being grants, so you never have to pay them back. And those that are not are loans, but they're very favorable loans. The interest rate's amazing, and the terms are amazing for a lot of these loans. So that is the premise. Plus, the unemployment commissions in every state have been flooded with people trying to apply for unemployment right now. I mean, they've even opened unemployment to self-employed people who aren't employees. And that's like an apple and an orange. They're not related. Self-employed people don't go get unemployment insurance, but now they do.
Wow.
So It's really weird. So they're just doing everything they can to help people through this time. So the CARES Act is designed to do that. And so, like you said, though, the main two pieces are the EIDL and the PPP. Now, there's a lot of other really cool things in the act that don't get a lot of press. And so a lot of people don't know about them because these other two take all the spotlight. But they're still there. And sometimes they are more favorable than those that get all the attention.
Okay.
So if you want to, we can go into some of the lesser known ones, but you probably want to start with the big two.
No, I definitely want to get into these other ones because I think that's just it. Like we see the headlines and we're living right now in a headline era. And it's no different than if you turn on the news. You really have to spend your weekend doing what you did or go find some people that aren't necessarily in the mainstream media. I think that's where you're going to find your best information today. I'm not saying don't turn on the news. I'm just saying take a lot of that with a grain of salt and go dive a little bit deeper into it. And that's what I hope this is. So I definitely want to do all those things. So if we want to start at the top, and you mentioned something, so you can cover this as you talk, but you said we've seen some amazing rates in terms. So I just definitely want to include that. I know we've seen some 3.75%, perhaps over a 30-year period, but make sure to touch on that as you're talking about the PPP and the EIDL, and then you get into some of the other ones that you just mentioned.
All right. So the way I like to start is almost every business is going to qualify or should apply and probably will qualify to different levels on the EIDL. The EIDL is designed, which is a weird acronym, but basically what it is it's a federal SBA loan for disaster. Now, it's been around a long time. Like a lot of disasters, though, are what you think about like flood or hurricane or something like that. But there is a type of disaster, which is known as an economic disaster. And that is what we're experiencing right now. Economic disaster is where you can't make money because you're not allowed to be open. So an economic disaster is brought about by a mandatory government prohibition for you to be open, or for a pandemic or something that forces your customers to not be able to come buy from you. So if the bar is very low to what qualifies as are you subject to an economic disaster, but you have to think of any disaster as a disaster. And that's why the SBA is there. That's why FEMA is there. That's why all these other organizations are there when we have natural disasters. It's no different. So what we do is we have this federal program for this disaster loan. So the only real qualification, and it's not quantified, like you have to have your sales drop by a certain percentage or anything. It's more of a subjective thing. But the thing is, has your business been economically hurt by this? And some of my clients say that it hasn't happened yet, but they can see it's coming. And I say that's a little bit of a gray area, but let's still go for it. The problem or benefit, depending on how you look at it, is until this thing gets some track record, we don't know exactly how they're going to come down in terms of enforcing it. Maybe they will be pretty liberal in enforcing it. Maybe they will let you say, well, you're not suffering yet, but we agree it's coming, so go ahead and apply. That's my position, at least. All they can do is say no, I guess. So the EIDL, or this disaster loan, is where we go directly to the SBA at the federal level. We don't go through banks. We don't go through the traditional channels. We just go straight to the federal SBA. So one of my services is to determine if that's a viable option for a client. And if it is, then a part of my fee includes actually doing that application for them and shepherding it through the entire process. So the front portal to get in to actually file the application is a few screens and then you're in. It's a very simplified, high level loan application process. It gives you a false sense of security, though, that, wow, this is so easy. I'm going to easily get this money. But what I do is I ask clients, because I know what the questions are going to be during the underwriting process. So I go ahead and try to get all the data to be sent to me on the front side, just because I know they're going to come back and ask for it. But even if you don't have the data, go ahead and apply anyway. Get the data when you can, because it's going to take them a while to get their questions ready. The underwriting process takes about 3 weeks if they don't have any questions. But of course, they're going to have questions.
So we send in the application, or someone sends in the application, they're going to have to wait 3 weeks perhaps to hear anything.
No, 3 weeks if there's no questions.
If there's no questions. Funded. So in the middle, so if they have some questions, when do you expect that they would start asking those questions? At 3 weeks or possibly even before?
Probably a week and a half to 2 weeks.
Okay.
Although this is brand news.
We don't know.
Yeah.
Okay.
I mean, the ones I applied for last week, I haven't heard any questions yet, but it's still so new, and they're slammed with all these people. I don't know how they're going to have enough manpower to do all this, but it's amazing.
And who's it going to? So the application goes in. Who is actually, because it's not through the traditional channels, it's not anything like they're used to or we're used to. Whose desk is that ending up on?
Well, it goes straight to the federal SBA.
Okay.
In Washington.
But are they handing that out to someone else? Are they enlisting banks or underwriter at any level? No, it's just them.
It's all done at the government.
Okay.
No private institutions, no banks, no
now
nothing.
Now that they're going to finance it, not that they're going to support it or be on the hook for it, but how are they possibly going to handle this many applications coming in? I mean, it's just by asking less questions?
I don't know. I guess they staffed up. I don't know.
Okay.
I would like to know the answer to that question.
Yeah.
But they've come out and said, if your application's 100% perfect and we don't have any questions, that's 3 weeks. But that's back when the application was the full-blown application, not this abbreviated version we have now.
Right.
So, my guess is that when they scale back, and by scaling back, that means they're not going to ask for all this due diligence up front as they were originally asking for when I first started working with this program. And so my guess is that everybody's going to be asked questions now. So you're probably looking at months.
Yeah. Well, so if we're talking about months and we're looking at staying in business for maybe it's 16 days, maybe it's a few months. I mean, that might not be enough time. So their doors might have closed. I'm thinking of like, oh, hey, you own a bar, let's say, and you've been inside bars and you've seen the books maybe that they have, and they have 5 employees. That could be a real problem for them. Because first of all, they might not be able to answer all the questions, right? They have it perhaps on a book. It's the realness of what we're dealing with right now. And this is how we've built businesses. Go ahead.
I think their thought process is they have 2 avenues to combat that, because it does take that lead time. Okay. So one of the things that comes along with every application, unless you don't check the box, and who would not check the box for it, is I turn on the application. It says, check this box if you would like us to send you $10,000 right now. Why would anybody say no? So everybody's checking the box. Okay. There's no underwriting for that. Okay. Even if your application gets denied, they're still giving you the $10,000 just for applying. It's like $200 for pass and go.
It's a great move in Monopoly. Yeah. So the $10,000, if you get that $10,000, does that take away the potential?
Not if. You will get.
You will get the $10,000. So you will get the $10,000. Let's say someone applied for $100,000 and they'd get the 10 and they would also get the 100.
No, that's part of the 10.
So they get 90. So that 10 just gets them going. That is the thing that they think will keep the examples that I've given you before, restaurant, a bar, daycare, whatever the business might be, that $10,000 will keep them afloat for a little bit.
For very little bit. I mean, it's like the $1,200 stimulus check, right?
Yes.
I mean, if you're on the lower income side of the country, that's really big money for you. And if you're a little bit higher, it's not. But
is that forgivable? That $10,000?
Yes, the $10,000 it's a grant.
It's a grant.
It's a grant. It's not a loan. Okay. So even though the SBA loan is a loan, and even though the $10,000 is part of it, it's an advance of it. The statute has purposely said that piece is a grant, not a loan.
Okay.
So that will buy some time. That's part of their thought process. The other thought process they have is you're probably going to apply for something else under the CARES Act on top of this, like the PPP, and that'll help you a little bit. So it's designed for everybody who wants to apply for this EIDL disaster loan. It's not just for small businesses. Big companies can apply for it too. And anybody can apply for it. And because of the lead time that it's going to take for it to be funded, if you're a business that can weather the storm a little bit, then that's good. If you can't, you have to take advantage of the 10,000 and one of the other provisions, like hopefully the PPP.
Okay.
And then by that time, this one will kick in and everything will be good.
Okay. So we're looking at, you get the 10,000, the EIDL application could take weeks, maybe months. We don't know because that's up to, I think, $2 million, if I'm not mistaken. And then the PPP is the other, that's the Paycheck Protection Program. That's more covering your payroll for the past 2.5 months based on a trailing 12 months, if I'm not mistaken. If you were going to go into that thing next, is that the next thing you want to talk about, the PPP?
Yep.
Okay.
Yep, I want to talk about that next. So, well, the last thing on the EIDL, one more thing. That one is an actual SBA loan. So you do have the traditional underwriting. It's a little bit more relaxed than it would otherwise be, but it's still underwriting. So they're still going to look at your ability to repay, your credit score. If your loan amount is under 200,000, they're not going to make you do a guarantee. If it's over 200, they will. So you still have a lot of the same underwriting criteria as any loan, which is part of the reason it takes a little bit longer. Now, the PPP is also a loan.
Well, go back. So you were just finishing that up on the EIDL because you had mentioned this before. I think that's where the rates and the terms come into play because the $10,000 is a grant. So that's it. So the rates, and I see there's for nonprofits and then for small businesses, what are those rates that you're seeing right now?
So for most for-profit businesses, the rate is right near 4%. I think it's
3.75%.
Yep.
Okay.
Yep.
That is it. Okay.
Yeah. 3.75,
Yep.
3.75. And it's for 30 years. Yeah. So when I say good terms,
you don't get that.
Good luck going out and getting a business loan for that. That's pretty awesome. So it's phenomenal terms, and chances are, unless you go over 200,000, you don't even have to co-sign for it. It's a signature loan. That's also unheard of.
Is there a chance that some of that loan would be forgivable, or is it all no? Okay, so that is those terms. Got it.
Now, what you can do, and what they actually are they're requiring you to do this. If you took out an EIDL loan between, I forgot the date, sometime in February, all the way till the end of March. I can't remember the dates on these. A little short window. In other words, if you've already gotten the EIDL loan.
Yeah.
And you're now applying for the PPP, they are going to require you to roll that into the PPP and refinance it into the PPP. And when they do that, the terms of the PPP used to be 10 years at 0.5%. Also ludicrous and amazing.
Yeah.
This is why the country is not in the banking business, apparently.
Right. Yeah.
Nobody's going to charge 0.5% and give you 10 years to pay it back.
Might as well
just give you the money.
Right.
So at the 11th hour, this is why, by the way, the banks you heard were supposed to start last Friday, being open for business for PPP. And a lot of banks put out messages, we're not ready yet, right? You probably heard that.
Yep.
Probably today they started opening for business for that, I'm guessing. But the reason they had a little snag is because Thursday night, right before, because Congress said Friday morning, the 3rd, every bank can start doing these PPP loans. But then the night before, they changed a whole bunch of rules, and now everybody's has to fix. That's why there's a delay. That's why there's a hiccup, I think, on people starting for this. But one of the changes they made at the last minute was to reduce the terms from 10 years to 2 years. And they doubled the rate to 1%.
Okay.
Still at an amazing interest rate.
Right.
But you only have 2 years to pay it back. Okay. But the reason I don't think that's going to be viewed as a bad thing is because, as I'll talk about in a few minutes, a lot of that PPP money will actually be forgiven, but we'll come back to that. Okay. I'm just talking about the piece that's not forgiven, that's going to remain a loan. 1% over 2 years is still pretty good. Now, that's why I said, if you already have applied for an EIDL loan and have received one, which is probably nobody, because I don't think anybody's received one yet, then you have to roll that in or convert it to a PPP loan, which means it's not going to be 30 years anymore. So what I'm telling my people, if they can afford to wait a little bit, is to do the PPP first, then to do the EIDL second. Okay.
But the EIDL was out there first, if I'm not mistaken. So if someone applied for that, let's say they applied 2 weeks ago or whenever that was, week and a half, and then they applied for the PPP a week and a half later. Do they fall into that, or they had to have received the money from the EIDL first?
It has to have been received from the EIDL first.
Okay. So very few people are going to show up in that category, like you're saying.
Yeah, I think very few people will be caught by that because of that stipulation. Now, the actual literal verbiage in the new law says that you have to add to the amount of your PPP loan, that you qualify for. You have to do the formula we're going to talk about in a minute, the 2.5 thing, but then you have to add any outstanding balance of an EIDL loan made on, here's the dates. I remembered it now. January 31st and April 3rd.
Okay. You'd had to have received the money between those dates.
Yep.
Okay. So if your application went out April 2nd, you're fine.
Well, yeah, probably no matter when that went out, because underwriting still taking a while. So I don't even know why they put that in there, because nobody's going to. April 3rd was.
But you know what? You never know. There might be someone out there, and you just save their business.
I mean, California saw this coming, and they actually got on the ball early. But most people, they did not. So I don't think that anybody's going to fall into that trap. But if theoretically they do, I'm just saying that's going to cut your 30 years down to 2. That's a very bad cut. So I don't think anybody's going to fall into the trap because of the dates. They don't know why they put that in there. It's because nobody's going to not going to trap anybody.
Right.
But whatever.
All right. So the PPP, you were just talking about it. You're going down that path, the 2.5 months and the terms of the PPP and how you qualify for that.
Yeah. So there was some confusion on how do you measure the piece to which you multiply by 2.5. We've heard multiple conflicting reports. Some people said, well, you look at your payroll for all of 19, whatever your 19 payroll was, take whatever the average for that, monthly average is, which is literally take last year's payroll, divide by 12, and there's your monthly average, I guess. But that seemed too easy. And then we heard another rule that said, if you were in business on February 15th, then instead of taking the calendar year 19, 12 months, you would just take a period of months from February until June of 19 and average it. And then there is something that says, but if you're a seasonal business, it's not fair to do that. So for seasonal businesses, we'll give you a different rule. So there's like all these different rules on how do you determine the average? But the thing that came out at the last minute the other day that I was just talking about that changed some of the rules said in there in black and white, calendar year 2019.
Okay. Just make it simple. Yeah.
I don't know. Yeah. I don't know the answer to this question.
Well, then in the middle of it, people are going to be submitting their applications and they're going to be going by whatever rule they heard from their friend or what they saw online or their CPA, and they're going to apply for that. So they're going to get a different sort of how many questions they want to ask.
Exactly. And I don't think it's going to be a big deal. I think the banks are going to be kind of loose with that. But here's my opinion. If you were in business in 2019 and you're not seasonal, just go for the average 12 months from your tax return, And that will probably be most people. So you're going to look at your last year's tax return or your W-2s from last year that you sent out to all your people. And you're going to take the average of all that, whatever that is. And then you're going to multiply that by 2.5%. And there's your maximum loan. Unless you have this outstanding EIDL, like I said. Oh, and by the way, you do have to subtract the 10,000 advance from that.
So if you're getting 100, you got the 10, now you're getting 90 because you've already gotten the 10.
Well, what I mean is if you apply for the EIDL, and you check the box that says, I want the $10,000, advance, that grant, and you get that for purposes of figuring out how much money you can qualify for to borrow under the PPP, whatever that is, you have to take 10 off of it. So let's just say you're going to base it on your last year's 2019's average payroll, gross payroll, times 2.5%. But it helps a little bit that you do get to add to that average payroll if you have employee benefits, like if you have health insurance or 401k employer contributions to that, or any employee benefits that you offer to your W-2 people, you do get to add that on top of their W-2 number.
Yep. Okay. This is going to the banks though. So you had mentioned that before. So all these different banks are out there, and it sounded like a lot of the banks were having issues. Some of the banks had no idea what to even respond with. We started asking questions just to kind of see where banks were. A lot of banks were going offline. Their site was crashing. For example, Bank of America, which obviously a big bank in the Carolinas, big bank in the world and country, they were only accepting people that are businesses that actually had lines of credit or accounts already set up at B of A. So it's kind of all over the place. I mean, I've heard large banks, and don't quote me on this, but I saw Citi was still dealing with it. They weren't quite ready yet. But it is going to the banks, but they're not necessarily, it's still backed by the federal government, right?
It's 100% backed.
Right. So the banks are only acting as like the intermediary?
Yep.
Okay.
Yep. The banks have nothing to lose.
People are panicking a little bit because they're like, well, how aren't they ready? But I was going back to when the healthcare, the Affordable Care Act came out, and people are all of a sudden, everyone had to go online at the same time. They had issues then too, just like they're having issues today. And it should be expected. But you expect it that over time, we don't know that it will sort itself out. The sites will stop crashing, the banks will be ready, and you'll be able to get your loan in there.
Yep, exactly. And so that's how this works. Technically, you don't have to go to your bank, but I think all banks have put out an internal policy that says pretty much don't even bother coming here for this if you're not one of our customers.
Right.
They still say you can come, but they say we're going to prioritize our people first because of the volume.
Right.
And chances are that we're not going to get to you.
Right. Well, they're going to have a lot more information because they've established a relationship and they can look at, your situation.
Yeah,
Are the banks at all, by any chance, looking? Obviously, they can look at the information. Are they looking to see what kind of stress your company? Because they can look at checking accounts, by lines of credit cards. Could they see, this business is struggling. Let's hurry up and get them some cash because we want to make sure they stay in business? Or are they not really doing it that way?
They're not really looking at that. They're only looking. The underwriting criteria, unlike the EIDL, has no bearing on your ability to repay the loan. All they care about is whether or not you were in business on February 15th of this year. If you were, then you qualify. And you had payroll, then you qualify.
And then you had mentioned this before, this can be forgiven. And how can this be forgiven?
So the amount of the forgiveness is dependent on whether or not you use the PPP loan money for a qualified purpose. And qualified purposes mean payroll, obviously, but it also means rent, or if your business owns a building and has, then it could include mortgage maybe, but those are pretty much it. Okay. So to the extent you do not use that money for those things, like, for example, if you use the PPP loan money to make liability payment on a fixed debt, like a car loan or something like that, that won't qualify. If you use it for cost of goods sold, that won't qualify. You have to only use it for payroll, mortgage or rent payment, and utilities.
How would they know that? Are you having to send information back, say, after the term's over?
Yeah. So when you apply for it, you self-certify that you qualify, number one, and number two, that you're going to use it for the only approved reasons and therefore qualify for the loan forgiveness. Yep. They will do some type of how insurance companies do audits at the end of a term to see, because you don't know until the term's over if they quoted you too high or too low, and then they true up. So that's how they're going to do on this. They're going to, if on the backside, eventually, they're going to basically come in and look and see, give us an accounting for how you use this money. Okay. Now, I don't know how they're really going, in the real world, going to police that. Right. I think it's just going to get wiped under the rug and move on, but I doubt people will actually.
Right. But you don't want to operate in that sense of that's going to happen. But I do agree with you that, because I even wrote that down, on the back end of this, there's going to be confusion. Yeah. There's confusion on the front end. There's going to be huge confusion on the back end. And I think, who knows, if they actually go through with the process of maybe spot testing it, the person that gets caught up in that that jet wash, they're going to be in some trouble because they thought they didn't owe the $200,000 back. Next thing you know, they got to write a check for $200,000.
Yeah, exactly. I mean, it's like the audit lottery. How are you going to get selected, right? I mean, I say that, but in Mecklenburg County, the last several years for business personal property audits, they audited 100% of businesses in Mecklenburg County. It took forever, but they finally got through it. So maybe they will just take forever and eventually get everybody, but I seriously doubt it. But assuming you do use the money for only the qualified expenses, then for the first 8 weeks of your payrolls and these bills, so 2 months, those 2 months, that portion of the PPP loan will be converted into a grant and forgiven. Now, that's one piece of it. The second piece of the forgiveness is you have to show that you did not decrease your payroll size once you got the loan.
So that's once the money comes in, starting then is when you don't decrease it.
Yeah, you can't have a decrease in pay.
Well, could you have had a decrease? Could businesses, because people have already decreased it?
No, they've already decreased it. But you are going to, the purpose for the loan is you have to bring them back on. You have to rehire the people you laid off so you can you have to staff back up.
Is there a date that's effective? So let's say someone was gone before all this took place. It had nothing to do with the coronavirus or COVID-19. It had everything to do with whatever, something totally different. Are they going to look at that and understand the difference between the two?
Yes, they're going to look back at the same quarter. They're going to look back and say, what was your size on February 15th?
Okay.
If you had already laid off people by that time, that's different, I guess. But most people probably hadn't laid them off quite that early, right?
Does that have to be documented that you laid them off? Because normally when you lay someone off or have a group or furlough, there's going to be documentation for that. If someone had actually resigned or was left for a different reason altogether, I would assume. So let's say someone leaves on February 16th, but they had nothing to do with this. They're looking at documentation at that point.
I don't know, probably, but it hasn't been tested yet. And they have not said, I have not seen anything in the language that says anything about documentation for that. Everything I've read is just they're going to measure what your payroll size and count was then. And then they're going to look at what it is now when you get the money, and they don't want to see it go back down. They want to see it go up.
And they're looking at the total number.
Yep. And to the extent it goes down during that 8-week period, then a formula kicks in that says, okay, so some of this is now not going to be forgiven. So that's how that works. Now, to the extent it is not forgiven, then it's going to be that 1% for 10 years. For 2 years. Okay. But if you think about it, the most you can qualify for is 2.5 times your average payroll from last year. And then you have to use it for 2 months. It's basically 2.0. So we already are at 0.5 more than we're going to be forgiven just by the numbers, right? Assuming the dollars are the same. And plus, like I said, you can use it for rent and utilities, but for trying to figure out your average from last year is just payroll, not rent and utilities and that. So by definition, there's going to be some that won't be forgiven because the numbers are higher than 2. But most of it will be forgiven. And the same thing with churches, and things like that.
Yeah. Did we cover all of the EIDL, PPP, got the $10,000 grant? You mentioned some other ones. Or did we cover all those in there that you wanted to cover?
Well, those are the 2 big ones, right? But there's some other ones in there. So these 2 big ones are the ones getting all the attention and the press and everything else. Yep. The PPP one is getting the most of the attention because Congress wants it that way and the media is talking about it. And don't forget, it's a big price tag. It's $349 billion of the $2.something trillion total package. $349 billion of it is for the PPP. Now, the PPP is a first come, first serve usage, right? So who knows how long it will take for the government to blow through $349 billion. But remember, each maximum is $2 million, as you said, cap. Now, most small businesses probably are well under that, I would think. But how long will it take until the government's out of money? Nobody knows, I guess. Right. And there's been a delayed beginning because of all the technical glitches. So they probably haven't given much out yet. I heard somebody tell me the other day, and I didn't have the facts to see if they're right or not, but I heard something like 3.5 million has already been given out in the state of California because they started a day early than everybody else. So I don't know if that's true or not, but so they're already on their way. But Trump has said, and we'll have to see if it happens, that when we run out of $349 billion, if there's still a need, he wants to go give them more. I don't know. That's a political thing that Congress got to vote on that.
Yeah.
But they're saying that that they don't want to end it, right? Just because you run out of money. But it is first come, first serve. So you do want to get your application in quick.
Get your application in. Yep. Okay.
So those are the 2 big ones, right? And so the EIDL takes a lot longer because of the time frame, right? And you don't know how much you're going to get underwritten for. I guess it's based on your financial strength or whatnot. But there is a formula for the PPP. It's 2.5 times, right? So you can quantify that when you go in. You know exactly how much you're asking for on that end. Who knows how much you're going to get on the SBA one? And then the 10,000 is a little bridge, I guess. So that's the part everybody thinks about. But what I try to do with my clients is I try to do the consulting, like I said at the very beginning, and I try to look at a holistic view, just like I do if they're my business client. And I look and see how all the pieces fit together and what do they need and where are they trying to go. So the CARES Act has other components to it, not just these 2 things for employers, small businesses. One is the fact that a relief provision that says, look, between now and the end of the year, assuming you bring your people back and have payroll again, we, the government, will let you delay paying us your payroll taxes on your people. until the end of the year. Now, they're not going to forgive it, but payroll taxes,
Right.
the employer's cost of payroll taxes is roughly 9% of gross payroll. But, the employer has to withhold FICA and Medicare out of each, an income out of each employee's paycheck too. But, they act as a trustee, right? They have to fork it over. They can't just pocket it, and then they have to match it plus a little bit more. So 9%. So every month, the employer has to pay over roughly 17% in payroll taxes. So the government says that's a big number. If you will agree to bring the people back and start paying gross payroll, we'll let you not pay the 17% for a while till the end of the year. They want you to use that money you would have had to pay in payroll taxes and use it to buy cost of goods sold, keep the lights on, pay your people. Don't give it to us.
Do you have to bring the people back?
Yep.
Like, what if you never got rid of the people?
Now, if you never get rid of the people, that's even better. Just whatever people you have. But they want you to bring them back. And that's why they're saying, keep the payroll money, put it back into immediate use, pay us later.
Yeah.
And they'll say that 17%, you still need to pay us someday, but we'll let you pay half of it at the end of 2021 and half of it at the end of 2022. So they're really working with you on that. Those numbers can add up. Now, another really cool program is called the Employee Retention Program. And that is where the government will partner with you and they'll pick up the tab for half of your payroll for the rest of the year, 50%.
How does that work?
So if you bring back your people.
Again, do you have to bring them back? What if they're still employed?
No, you don't have to bring retaining. That's a good point, actually. And that's what I mean. And that's why it's called retention, I guess, on purpose. They're hoping you won't lay them off in the first place. But it also works if you already did lay them off and you're bringing them back and now retaining them, right?
Got it.
So let's say your gross payroll is $10,000 a month. This program is saying the government will pay half of that, 5, and you pay 5.
Okay. So you're saving half on your payroll at that point.
Yeah, they take half of your payroll and pay it on your behalf to your people.
Okay. How do you qualify for that? You have the EIDL, you got the PPP, you got some of these other things. So they want that too. Anyone can apply for this?
No, that's the catch.
Okay.
That's probably why you're not hearing a lot about
I'm
it.
digging for it.
That's why the other ones get all the spotlight.
That's right. Okay.
But if you run the numbers, as I have done last week, I did this for a lot of clients that I consult with on making these decisions. And I would say over half of them, I did say go for PPP. But the other half, I said, don't go for PPP, go for this instead. Because when you run out the numbers, 50% of the gross payroll is going to be more dollars that the government's giving you than 2.5 times your payroll from last year is.
Yeah.
Right. Even with the loan forgiveness piece on the PPP, it's still going to come out more dollars in your pocket if you do this one. But they just come with strings attached. You're right. So number one is you have to show that to qualify for this, that your business had to be shut down because of the virus, like restaurants.
Okay.
If it's a people business, you can't be 6 feet and do people's hair, right? So, or restaurants or
Massage
anything that's mandatory, right?
Yep.
Either that or you have to show that your business has had a serious economic decline because of this. And the way they measure that is they say, let's look at the second quarter of this year. If second quarter 20 was at least 50% off from second quarter 19, you qualify. Okay, so a 50% drop over the same time last year. And you will remain qualifying until the end of whatever quarter that you're measuring that is at least 80% of the previous year's quarter. All right, so if in third quarter you weren't 50% under third quarter 19, but you were 79% of 19, right, then you still qualify. But if you were 80% of third quarter 19 or higher, then that means you no longer are economically hurt. But they will let you go ahead and finish out the quarter before they stop letting you qualify. So you have to run the numbers. And of course, the problem with this program is you have to guess for the rest of the year. Is third quarter going to be bad enough?
Right.
Is fourth quarter going to be bad enough? Nobody knows, right?
Right.
It's how you going to guess that, right? So you've got to figure out if you're going to take a while to bounce back, right? But even if you are healthy again in fourth quarter, I bet you anything you were horrible in second quarter. And you're probably still going to be pretty bad in third quarter over last year, third quarter. So it's not like you have to qualify for all quarters, just whatever quarter you qualify for, right? But still, they're paying half of your payroll. And so when you run the numbers out, like for example, this one client, I ran the numbers the other day and I said, this is going to be $18,000 better for you than the PPP for the rest of the year.
Yeah.
Right. So you just have to run the numbers both ways. But here's the problem. If you go for the PPP, you lock yourself out of being eligible for either of those last two programs I mentioned.
Okay. Well, I mean, I know those are the things you just don't know about, right? So we were saying at the very beginning, you just jump to the thing that you hear about. Have you done it? You show up to if you just log into your bank, it's going to be right there in front of you. That's what you got to go do. And, that's where it takes press the pause button, call your CPA, call Randy and have that conversation.
That's all you got to do.
That's it. I know you're busy and you're probably dealing with it. I mean, normally this would be tax time, right? April 15th is around the corner or whatever. It would have been April 17th. But obviously that's delayed. That goes until July as of now. There's two questions I have for you. We can get you out of here. But have you heard anything to say, okay, well, we're July 17th. We don't know when this pandemic is it's never going to be necessarily over, but like the way we're dealing with it's going to end. The disease might not end, just might be our new normal in a way. Do you sense anything that tax season could delay again? Or do you think July 15th is going to be the day? As of we're talking right now, of course, this can change.
I'd be very shocked if it's not the day. I think it will be the day.
Okay. So, and the last thing, and we've heard this before, and I don't know if it's getting play in like different areas, but they're talked about forgiveness on large payments, say mortgages. So the banks, different ways to forgive money. Is this like they're talking about like the money, the stimulus package, the forgiveness, the EIDL, the PPP? Is that the way that they're in a way saying, we're not going to delay your mortgage payment. We're just going to give you money to cover rent, to cover these major payments that you're going to have? Or do you think that they could go down that path on, if they need more money?
Well, I mean, that's not a government program. That's mortgage by mortgage or vendor by vendor.
Right. The companies. I didn't know if the government could get involved in that or if you've heard any talk with it. Okay.
I have not heard anything about that. I think
Okay. Those are questions just being asked. So that's why I pose them to you.
I think what you just said is most likely the actual answer, that their thought process is that by doing these programs and letting, like for the PPP, letting a qualified use be a mortgage payment or a rent payment or a utility payment is in lieu of that.
Okay. That makes sense. Randy, how can people learn more about you, your business, and get in touch with you?
Well, they can call you or email you or whatever, and you can pass along the information. That's probably the best way, just to get in touch with you guys.
Okay.
Yeah. Like you said, we represent you guys and your businesses. And so the best testimony or the best referral is a testimony. And you have given that today, which I appreciate. So I think just get in touch with you when they see your podcast, and maybe you can have a little call to action at the bottom. Like if you want more information, let us know and we'll get you in touch. But what I am offering is right now, especially and probably for the next couple of weeks, is a one-off consulting engagement where if they call me and they say they were referred to me by you or they heard us on your podcast and they want to engage our help to consult, what we do is we just send them a simple engagement letter and a fact finder. And we say, look, I need all these pieces of data points. You send it to me. Then what I'm going to do is I'm going to have an interview with you. I'll call them and I'll talk to them on the phone, ask them some questions. And then I have a model that I've built where I run all their information that they give me through my template, and it determines that whether or not PPP is in their best interest or one of these other programs. Then what I do is I customize a blueprint for them, like a roadmap, and I send that out, as a report, and it tells them exactly what I think they should do, in what order I think they should do it for maximum economic help. And then to the extent one of my suggestions is going to be the EIDL, part of my fee includes doing that process for them, because that is a direct to the government. So I don't have to go to a bank. So I actually can do that for them.
Okay.
The other ones, I just have to recommend if you should do it or not, and then refer you to somebody. But the actual EIDL, I'll do that from start to finish for them. Then, like I said at the beginning, then an underwriter will eventually come back with some questions, and they can just kick those back to me, and I can help them make sure they answer the questions and get that to the finish line. So is the consulting, and it's just based on just an hourly rate, but I do cap it pretty low. I cap it at a low threshold because everybody in the small business world is hurting right now because they're not making any money, and I don't want to go charge what I could charge for it. So I just cap it pretty low, and for, I don't know, the average is $500 or $600. They get the whole thing. and I give them what they need to know, the process to go through, and I actually handle the application process for the EIDL.
Yeah. No, I think it's fantastic. And first of all, I appreciate it. I know this is complicated. It's a tough times, busy times, obviously. There'll be a lot of complaining, a lot of challenges that we're all dealing with. But I think it's pretty amazing that at least we are in a country that is putting this stuff out there and giving us opportunities. And we have people like you, Randy, that can go out here and read between the lines and understand this and have a long history behind it. And like I said before, worked with you for many years, and we appreciate the time and thinking through this with me and helping answer some questions for a lot of us. So thank you, Randy.
Absolutely. Thanks for your time, and thanks for suggesting that we do this. I appreciate it.
Yeah, man. One of my favorite things about CADSource is the opportunity to chat with amazing business leaders and entrepreneurs. We hope you enjoyed the conversation. If you want to connect, you can find me on LinkedIn or visit us at cadsource.com. Thank you for listening to this CADSource production, Entrepreneur Perspectives, building and protecting your business one podcast at a time. This episode exists because of CADSource. CADSource is your content team. You know how many business leaders need help communicating their story? That's what we do. Content strategy, creation, and distribution for business leaders. This provides opportunities, relationships, and a platform for you and your business. Why do we do this? Because at CADSource, we exist to help you create and share amazing content. And yes, you should have a podcast. We'll help you. Learn more by visiting cadscontent.com.